Hey everybody, traders, Chris Pulver here. Happy Thursday. Little update for A1 Trading and the Pulver alerts. Just wanted to go through the Discord here with my trades I've been posting this week. I know we had a schedule change where I'm not on the live sessions as much, but I'm going to be posting weekly videos to address some of the trades that I'm actively taking. So if you get your hands on the A1 Edge Finder or the stock box, you want to add in the bundle with my Pulver alerts, I'm actively trading as I always am. So just going through some of the trades this week. I did cancel position that I took on Tesla. It was a pending order through earnings. It was right here. I was doing a couple of naked puts. I was going to do a 280 and a 275 naked put and then do a bear call spread trying to get 750. Yesterday the trade was offering about $3 credit, but with earnings I thought if we had a decent push to the downside, this credit might jump up to, $6, $7, $8. So I'm trying to get filled at a really good price. Obviously that's going to be a bit exposed with having two naked puts, but I was willing to own the shares of Tesla. Today after earnings, Tesla is down about $20. But the credit's only trading at $3. So it's unlikely, unless Tesla continues to fall really, really hard, it's unlikely that this is going to be doubling in volatility in the next couple weeks or next Friday. So I went ahead and canceled that trade as I posted here. So canceling the trade, and what I did instead is I'm taking an 8-1 expiration ratio spread. So I'm now buying the 295 put with one contract, selling the 290 with two contracts. I'm still willing to own Tesla if price comes down to 290. But the nice thing is about a ratio spread is it builds out the trade that looks something like this. If you're familiar with the ratio spread and the way it looks on the risk graph, this is where price is at. So price is trading around 303 right now. And if price goes down, there is a profit trap before I take on the risk. So this is my profit trap at 290. And so if price is down to 295, 294, 293, 292, 291, there's a profit trap that leads me up to potentially a $5 winner, which would also add to this net position. So I could, if all is perfect by 8-1, if this is trading at 290, I could potentially make $685 on this trade. That's like perfect. Now, if we're at 289, 288, 287, I still can make money on this trade because my break even is going to be all the way down here at 283. So we not only dropped $20, which is right around the expected move, but if price is going to drop another $20 for that follow through, that's a pretty big chunk to the downside. So most likely this is going to be an income trade where I just keep the $1.85. That's what I'm planning on. However, you can see here in the risk graph, that's what the trade looks like. So if we stay sideways or start to go back up, I'm just going to see a $1.85 decay to, maybe 30, 20 cents, 10 cents, or just let it expire for full profit by 8-1. If price continues to fall a little bit, there is that potential profit trap. There are high premiums in Tesla, so I don't mind owning the shares. This is on one of my accounts that has zero Tesla exposure. So if I at least took 100 shares of Tesla, I add a covered call out for a week or two, I could probably generate anywhere between $5 and $10 of credit, and most likely do a quick repair, trying to make at least $1,000 net profit. So the goal is to, one, have an income trade for $1.85. If price stays above 290, I'm just going to keep the full income at $1.85. If I get price to push down towards 295, 294, 293, there is a chance that by August 1st, on that Friday, there is a profit trap there that is worth potentially $500. If price falls further than that, that is fine. I know that there's a break even if I'm assigned at 290, that's by expiration, and I will quickly go in and repair knowing my break even at 283.15. So that's a recent trade I just posted on Tesla. Google, I closed out a trade this week. That's my A1 highlight. We took a trade during the April decline. Once we had the recovery like April 9th and onwards, I put in a ratio spread. It was a 105 put and a 100 put. So I bought the 105, sold the 100, and that was 235 credit. I just closed it out today with a lot more time left. This expiration was out to January, and here we are in July. So there's still 5 months left in the trade, and I went ahead and took about 91.4% of that max credit. So a lot of time. I get rid of it. I take most of the profit. It's not worth hanging on to it for the extra, 20 cents. So I'm just going to take the profit. That was a nice trade on Google. Added a new trade on T-Mobile out to January, 195 by 190. I would be willing to own the shares of T-Mobile. If we were less than 190, we've already had the stock down about 30 to 40%. There's a pretty good probability here. Chance of income at $2.60 is about 90%. Chance of assignment is about 10%. I will repair it very quickly. Again, it looks like this ratio spread. Price stays sideways, I make 260. Price goes up, I make 260. Price goes down a little bit, I still make 260. Price goes down to a 11 delta, 10 delta put right now. I still have a potential profit trap that's worth $5. So I could make some money there as well. Okay. All right, so that's a new one on T-Mobile. That was a trade that I canceled. Closing Ethereum, so that was ETHA. We had this trade running for only a couple weeks. This was open for like maybe 2 weeks in one day, and we had a huge rip on Ethereum. 1977 was the buy on the ETF, and I took profit at 29. Right now, let's take a look and see where ETHA is at. We're trading at 28.30. So I actually got out at a pretty good price. I'm ahead about 70 cents. There's probably still some more upside to it, but I'm not trying to be super fancy with it. I was talking originally about a 50% take profit. I'm closing out for about 47%, 46.6%. So I'd say good enough. Happy to take the trade. Nice win. Let's see. This is another one that we closed out for Palantir. Another ratio spread, the 130 by 125. Palantir continues to rip and make all-time highs. Took the trade for 248, closed it out for 8 cents, keeping almost 97% of that max credit, with also saving myself 5 months of time and getting some buying power back with that one, that 65 and 62.50. Those were both naked puts on the trade. So good win there. Zoom added this trade in. This one's out to March of next year. Again, it's an income trade. Zoom, I think at least has the stay power to hold above $62. Right now, Zoom is trading quite a bit above that, so we should be in good shape on Zoom. So ZM is trading at $75. Looking at the options chain out to March of next year. So this is March. I'm sitting here right around that expected move of around a 15 delta. So the probability based on this option chain and current volatility is we shouldn't see Zoom go below 60 bucks. If it does, I'm going to own it and I'm going to repair it, and I'm going to try to make somewhere between probably $500 on the trade. It's not a super expensive stock, so if I can make $500, I'll be happy with that, just on a couple of covered calls over maybe 1 or 2 months. But I'll use the capital to repair it. Okay, that was a new trade on Zoom. Anything else here? And then I just want to talk markets and shop here for just a moment. Apple, that was a new trade as well. 170 by 165 ratio spread for 218. If Apple breaks below 190, Apple has problems. If Apple holds above 210, 205, 200, it's going to be this continued resiliency of a lot of people have Apple in the portfolio. They're not necessarily dumping it. They're just selling tons of covered calls. So it's hard for Apple to go higher, but it's such a staple in a lot of people's portfolio that if they keep it, then hopefully it's going to be in good shape and just be resilient. And by the end of the year, if the market doesn't take a huge nosedive, I'm pretty sure Apple's resiliency will continue, and we can go ahead and collect that income there for 218. Coinbase, that one is going to be a full profit. I'm just going to let this one expire tomorrow. So this is good for 58 cents. I was looking for a bonus trap if it was up a little bit higher, but Coinbase ripped all the way up to like 442 and then has fallen all the way down to 394, which is perfect. We wanted this trade to stay below 450. It did. I gave it a chance to give us a profit trap. I obviously wish I would have taken on a bit more credit on the trade, but I didn't want to take on the risk, so I was only 15 wide. So this trade worked out to give me like for about $1,000 risk, I'm making 60 bucks. I was hoping for a bit of a profit trap. I didn't get it, but either way, chance of profit was 91%. We're keeping it. I'm going to walk out of here with the full 58 cents. It'll just expire tomorrow. Baidu, still in this one. Close this one out for profit. Still have some shares of Baidu, Alibaba, and that should get us caught up for these recent trades I posted in Pulver alerts. I'd like to go into the charts right now and just take a quick peek. So if we go into the charts, there's your drop on Tesla down to 303. If Tesla drops into the 290 zone, I'm willing to take some assignment and repair it. I think there's pretty strong support between 290 and 275. I think that's pretty strong support on Tesla, at least in the short term. To me, on the technical side, as long as we can stay above, I'd say like the 260 to 250 area, if we stay above that, to me on Tesla, this technically looks pretty promising for a high right side of the trend line. Is this a reversal pattern where we're just forming a wedge and there's all this consolidation? If the market can trough here and then rally back up into the 360, 370 handle, if we break this neckline, what's kind of exciting about Tesla is you can take this measured move. You can take this measured move from low to high. You can measure symmetry to a higher high, and you can also measure from the break of this neckline to a higher high, which does propel us up to all-time highs. Now, I think in order to get this, when you see a little bit of optimism where, everyone's worried about EV credits and that Tesla's only made money because of EV credits. Look, I think if Tesla's going to have upside, it's not because it's an automaker. It's because of humanoids and robots and automation and profit margins and robo-taxis. That's what this, to me, is going to be bullish for, not because of making cars. There's too much competition in China. They've failed on deliveries, and they're hitting, the headwinds are like, they're all over the place for Tesla right now as far as an automaker. But beyond that, Tesla is so much bigger. So I don't know. We'll see. But it's a high premium stock. It's super liquid. I've been using it for income all year, and I will continue to do so and try to take advantage of that. But know the risk and also know the break even. That's the most important thing. So I'm going to continue to use my ownership and sell covered calls and try to collect the premium, lower my cost basis. And realistically, if I'm, kind of repairing or flipping Tesla for, $2 to $3, $4, $5,000 at a time, I'll take it, do it again, take it, do it again. I've done that all year, and Tesla's treated me pretty well thus far. Okay, let's go to the overall markets. We've had fresh highs again on the year. I'm actually quite surprised. I thought when we kind of ran into this 8, 9, 10 candle move that we're going to stall a little bit more. But this thing is running to a melt up degree that I think when we ultimately get a pullback, it's going to be fast and furious. I mean, a pullback at least to the 21 period, that's a 2% pullback. A pullback to the 50 period, that's about a 4% pullback. I'm just saying, do not be surprised to see anywhere between like a 3 to 5% correction in these markets. Now, I do think that 3 to 5% correction can be bought, but be aware of the potential, high, low, lower, high, lower, low. Everyone gets a little bit more nervous. The market takes time to kind of flush out, and then we kind of build our way back to these highs once again. Okay, so we might have a bit of a pause in the market versus just more up, 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 up. I think the best thing right now for any bulls would be the market offers up a dip, and it just goes right back up to the highs and rallies and continues to go. And that's all it is, just another pullback. Because if you look at 2024, the market did that all year. Right? We had a pretty bullish market all year. We got out of this run in late 2022 into 2023. This is a correction we saw back in summer 2023. So we had about an 8 to 10% pullback here in, August, September of 2023. We came out of that going into, October, November, and we tested the 21, kept going, tested the 21, kept going, 21 and 50. Once we got below them and back above, it kept going. Tested the 21, tested the 21 and 50 again, kept going, right? This is 2024. So we had several tests. Test right here, kept going, test right here, kept going, test right here, kept going, test right here, kept going. It continued to do so for the entire year. So if that momentum is going to continue, at least a pullback into something like this that can keep going, and again, keep going, and again, keep going. But this drift to the upside has been pretty extreme. And I'm getting some numbers and readings, and I'm thinking this market has to pull back at least 3 to 5%. So I'm not sitting here trying to call a top. I do have some hedges in the near term, trying to get a play back down to like 6,000. I'm paying $250 to make about $2,500. But I want to see if this market can flush down to like 6,000. I'm trading this on XSP, actually, in MES, which is micro futures. But I'm telling you, don't be surprised to see the indexes drop somewhere between 3 to 5%. If the market snatches that support up and just puts it right up to highs, then we still have a pretty aggressive bull market. If we snap below this 50 period and stay there, then we could have high, low, lower, low. It might take a little bit longer to hold and kind of trough out here between like 6,000 and 5,700. But to me, that's still a keen level of support. It's actually a critical level of support, because if we break below 57, it looks like a lot more damage could be done. But if we stay firm above 57, then this is a pretty good bull market that's still very well supported. So that's my outlook on indexes. We go to currencies. Dollar index. I still think the dollar is a tricky trade. Don't sell the dollar, in my opinion. I'm not selling the dollar. I think this is going to be sideways, maybe troughing. A risk-off event could hopefully push the dollar up for maybe 100 to maybe 100 to 101 on a pullback. The bond market also would be a bit of a risk-off tone if we get it. Bonds are up to 86. I'm still actively selling diagonal spreads with an 89 call. So I'm still watching closely. Yields haven't really budged much. Here's the 10-year yield. So we're still quite sticky on yields. The 30-year mortgage rate is averaging about 6.75 right now. Yields just haven't budged. We are coming into July 30th, which is going to be an FOMC rate decision. Plus you have non-farm payroll, plus the tariff deadline, which is supposed to be a firm deadline on August 1st. I think there's a lot of pressure right now to get Europe on the same side to ink some type of deal with the US as well, like we saw Japan do this week. So now the UK, Vietnam, China's had a push. Japan is in line. Now we get the European Union on board. Maybe that's enough to keep these markets satisfied without the market falling heavily. So I think the whole idea is the trade war and tariffs aren't going to be as impactful as everyone thought. Obviously, it looked like the market was trading like a systemic risk, but that was a hard pivot on April 9th, and the U.S. is going to continue to see some bond flows and stability. But we're already up, 7-8% for the year. That's around average. I think this melt up might take us up into like the 6,500 zone, maybe 6,600 zone. A big rip this year, in my opinion. If somehow the S&P can get up towards 7,000, then we are talking probably a bubble. If we push another, let's go from current prices. Let's say this market can find it in its heart to go up another, 9 or 10%. That type of volatility off of an April low is pretty wild. I mean, anything can happen. But if we go from the lows around 4,800 up to 7,000, I mean, that's a 45% comeback off those lows. It can happen. It's happened during crashes. It happened during COVID. It happened during 2018's Volmageddon. It happened during 2016's crash. It happened during 2014. It happened during 2008, 2009. We've seen the market, bottom out and have that reflexivity. Certainly a lot more the last 6 or 7 years. So I don't know if the market's going to continue to be just nothing but bullish. Maybe it is. I think there's a little bit of hesitancy coming into these recent highs. I'm expecting kind of in that wake of like 5 to 10%. 5 to 10% corrections to me offer up higher volatility to sell some premium, and also opportunities to position for, if I can sell and call some like April lows and take in some income trades, then I'll be pretty active in the Pulver alerts. All right. So I hope that helps for A1 trading, little update from my side, and trades will keep coming in. Keep an eye on those, and I hope I'll see y'all soon. See you in live markets. Take care. Bye.